Hey there, welcome back. I'm really glad you clicked on this one because today we're diving into something that touches every American in some way, whether you're working, retired, raising kids, or just trying to get by. We're talking about taxes, but not just any taxes. This is all about President Trump's brand new tax bill that he's calling one big beautiful bill. It was signed into law on July 4th, and it's already being called one of the biggest shakeups to the tax system since 2017. Now, I know taxes aren't exactly everyone's favorite subject, but here's the thing. This law is packed with changes that are going to affect millions of people. Some of these changes are huge, some are small but add up over time. And a few of them might not even be noticed until you're sitting down with your tax software or accountant next year. But whether you're 25 years old working your first job, or 70 years old living on a pension and Social Security, this bill has something in it that probably applies to you. So let's go step by step and break it down in plain language. First, let's clear up a question a lot of people had. What happened to the 2017 tax cuts? Remember those? They were supposed to expire in a couple of years. Well, Trump made them permanent. That means the same 7 tax brackets are staying, from 10% at the low end all the way to 37% at the top. And those brackets will keep adjusting with inflation, so you don't get pushed into a higher tax bracket just because your paycheck goes up a little. The standard deduction is also staying high, which is great news, because most Americans take that instead of itemizing. For 2025, it's about $15,750 if you're single, $23,625 for heads of household, and $31,500 for married couples filing together. These numbers will rise with inflation too, so they don't get eaten up by higher costs of living. But here's where the trade-off comes in. Personal exemptions. The extra deductions you used to get for yourself and each person in your household are officially gone for good. They were suspended before, but now they're never coming back. So if you've got a big family, you'll notice that difference. It's kind of a give here, take there situation. If you live in states like New York, California, or New Jersey, you're probably familiar with the SALT deduction. That's state and local taxes. Under the old rules, you could only deduct up to $10,000, which was a big problem for people with high property taxes. This bill raises that cap to $40,000 if your income is under $500,000, and that will go up a little each year through 2029. After that, it drops back to $10,000, unless Congress steps in again. So for retirees and homeowners in those high-tax states, especially seniors on fixed incomes, this could be a much-needed break. Now let's talk about seniors specifically. Trump had talked a lot about eliminating taxes on Social Security, but that didn't happen. Instead, the bill gives seniors a new $6,000 deduction, starting at age 65. That's in addition to the standard senior deduction. It lowers your taxable income, but it does phase out if you're making more than $75,000 individually or $150,000 as a couple. After 2028, this deduction goes away completely, unless extended. The White House says this will help most middle-income seniors, and they estimate around 90% will pay no tax on their Social Security. But some experts point out that a lot of seniors weren't paying taxes on their benefits anyway, so the actual impact might be smaller than it sounds. Here's a surprising new twist. Tips and overtime pay can now be deducted. That's right. If you're working in food service, hospitality, or any tipping profession, you can deduct up to $25,000 in tips if your income is under $150,000 as an individual or $300,000 as a couple. Same goes for overtime pay. You can deduct up to $12,500 if you're single, $25,000 if you're married. And the great thing is, you don't need to itemize to take advantage of this. It applies even with the standard deduction. That's money directly back in the pockets of people who work long hours or rely on tips. Car buyers get something too. If you buy a US-made vehicle and take out a loan after December 31, 2024, you can deduct up to $10,000 in interest on that loan. This only applies if you make under $100,000 as an individual or $200,000 as a couple, so it's aimed squarely at the middle class. Just like the tips and overtime deduction, this one only lasts until 2028 unless extended. Families also get a mix of benefits. The child tax credit goes from $2,000 to $2,200 per child, adjusted for inflation each year. But here's the catch. You now need a valid Social Security number for the parent or guardian to qualify. That change alone is expected to exclude millions of kids of undocumented immigrants, which has made it controversial. Then there are these new Trump baby accounts. If your child is born between 2025 and 2028, the government will automatically deposit $1,000 into a savings account for them. Families can add up to $5,000 a year in after-tax contributions, and the money grows tax-deferred until the child turns 18. At that point, they can use it for college, buying a house, or even starting a business. The idea is to give every child a little head start in life. Critics say many families may forget to use the accounts or won't contribute enough to make a difference, but it's a brand new feature of the law. Adoptive families also get more help. The adoption tax credit is now partially refundable up to $5,000, and from 2026 onward, it will adjust with inflation. Plus, employers can now provide up to $7,500 in dependent care benefits tax-free, which helps with daycare costs. The child and dependent care tax credit also got a boost. You can now deduct 50% of eligible expenses. That's a big jump for families paying for childcare. Charitable giving also changed. If you don't itemize, you can still deduct up to $1,000 in cash donations or $2,000 if you're married. If you do itemize, things get a little stricter. Donations now need to exceed 0.5% of your income to qualify, and high earners can only deduct up to 35% of their income instead of 37%. The government says this makes the system more balanced, but it does limit how much very wealthy donors can write off. For small business owners, there's now a guaranteed $400 deduction for anyone with at least $1,000 in qualified business income, as long as you're active in the business. Gambling losses can only be deducted up to 90% of winnings. Casualty losses only count if there's a federal or state disaster declaration, and education accounts like 529 plans and ABLE accounts can now cover more things, like tutoring and therapy. On the flip side, a few deductions are gone. Moving expenses are eliminated for almost everyone except military and intelligence workers. The bicycle commuter reimbursement is repealed, and starting in 2026, you won't need to get a 1099-K form unless you earn over $20,000 and have more than 200 transactions. Now, if all of this sounds like a lot, that's because it is. Trump and his team say the bill simplifies the tax code and gives real relief to working families. And in many ways, that's true. If you're a server, a nurse working overtime, a retiree on a fixed income, or a parent raising kids, you could see extra money in your pocket. But there's another side to it. The Congressional Budget Office estimates this law will add over $3 trillion to the national deficit. And to help pay for it, funding cuts are coming from programs like Medicaid, food assistance, and green energy credits. So while taxes may go down for many people, other areas are taking the hit, and that's the big picture. For some, this will feel like long overdue tax relief. For others, it's going to feel like a shift in priorities that leaves out the most vulnerable. Either way, this law is going to shape how we all file taxes for years to come, and it's worth knowing what's in it so you can make the best decisions for your situation. So what do you think? Do these changes actually help working people and seniors, or do they just shuffle money around? Drop your thoughts in the comments. I'd love to hear where you stand. And if you found this breakdown helpful, don't forget to hit that subscribe button so you don't miss future updates on money, taxes, and how these big policies affect your wallet. Thanks so much for watching, and I'll see you in the next one.